As I told, as I told you yesterday, that today I'm going to show you on how we can correctly locate our zones, on how we can know where is the exact price that we can either buy or sell in the market. Okay.
Okay.
Yeah. So that is what I told you yesterday. I told you about what we call a premium zone and discount zone. Okay. Yeah. So those are some of the areas that we usually have to see and check in the market so that we may know where is our exact price where we will either buy or sell in the market. Premium zone and discount zone. So there is one tool that we usually use in order for us to know where are our premium zone and where are our discount zone. Okay.
Okay.
Yeah. So we usually use what we call a Fibonacci retracement tool. You know it, right? Yeah. Usually use this. For me here, I have already set my points. It is easy for me to know where to place my positions. So see, you can exactly see my Fibonacci tool. So I will try to show you on how we can find the premium zones and the discounted zone, and on how we can use what we call optimal trading entry. There is something we call optimal trading entry, where we use some points in the Fibonacci tool to know where our exact zones that we will use as our points of entries. Okay. So I'll show you how we can try to draw these premium zones and how we can draw these discounted zones. So a premium zone is the point that we usually expect to sell. Okay. The discount zone is that area that we expect to buy. So what we do, you go to your Fibonacci retracement tool, and then when you click it, then you will go to setting. Okay. It will bring these types of points here. You see these points I've marked. When in initial price, you will find there are a lot of areas have been ticked. All of this area, you will find they have been marked. Okay. For you, you will just use certain points as your very important points for you to draw your premium zone and your discounted zone. These zones will help you to know where are the zones that you will be absolutely ready for you to sell, and where you will be perfectly able to buy. Okay. So usually you have to make sure you have marked point 0 and point 0.5 and point number 1. Let me try. You will make sure you have unmarked these other areas. You just leave points number 0, number 0.5, and number 1. Yes, I think that yeah already. So you can also choose certain colors so that you may know where to divide them. For example, point number 0.5, you can put here, it has used a red color here. Okay. And here it has used black. And here it has used blue. Then you click OK. You see these areas, you see this blue color, this red color, and this black line here. You see? Now we have created our premium zone and our discounted zone. Okay. And your premium zone is this area here, from this point to the upside here. This is from that point 0.5. That is your premium zone. So in this zone, this is the zone where we will be expecting, if there is any order block in this area from this point, if there is an order block here for us to sell, if you find your order block for selling is in this zone here, then you can sell. It is very good for you to sell. You can choose one of the order blocks here and wait for price to touch, and then you can what? you can say, like here you can see I have two order blocks here. I have this one here. You see that order block?
Yeah.
And also I have this one here. I can try to draw this one here. Okay. And you can see how price respected these order blocks. You see, this lower order block here, this one was respected here. You see here.
Yeah.
Yeah, it was respected here. And you see price went down to this point. But also this one was our major order block, this one here. And you can see what happened here. Price tapped into this. And now it is continuing to sell. It is still selling now, you see. So that's how you can know this is our premium zone, and it is a zone that we expect to sell. So in order for you to know how to draw this one, you must first see where was your swing high and where is your swing low. Do you know those swing highs and swing lows? Do you know them?
Yeah.
The swing
Yeah.
high,
Yeah.
yeah, the swing high like this one here, this is our swing high, this point here. And this. So this one is our swing high. Okay. This is our swing high at the highest point that we can see price has reached it. So this is that's our swing high here. And our swing low is this. This is the lowest point that we can see price has reached it. You see, this is our swing low. And this is our swing high. Yeah, you know them, right? So you can know how to do it. So you start from this point here to your swing high here. So because we expect to sell, is it? Now you draw from this swing high, and you move your cursor into this swing low here, and then you just want a single click, and then you'll see this kind of what this kind of Fibonacci tool will show up, and you can see price has been divided. So you know this highest point from this point here, from this point number 0.5 to the upside here to our swing high, this is our premium price. So any order block in this zone is a zone that is very, very good for us to sell. Okay. But if you find your order block here, you draw your order block, maybe somebody could have said, maybe this is my order block here. See, let's say an example, this one here. This one here. Okay, you see that? This blue area here, you see?
Yeah.
This is not a good order block for us. Why? Because it is in a discount zone. Okay.
Can you show me where order
Yes.
block
Where?
in blue area? Where is order block in blue area?
Yeah, I'm trying to tell you that somebody could have said maybe price was right here. Let's say price has not shown us these zones here. Maybe here we could have been, maybe let's say price was still in this zone here. We are here down, maybe here at swing low. You see, at swing low. Let's say price was right here. We have not been shown this other movements. We were just here. Maybe somebody could have said, let me try to draw my order blocks. I'll draw this one, I draw this one and this one. Okay. So somebody could have said, let me wait if price touch this blue area where we have drawn my last bearish, my last green candle here. Maybe if price touch here, I will sell. Okay. Okay.
Yeah.
Maybe why? Because maybe somebody says, as I can see here from behind, I can see this has been one of the major points of resistance here. You can see here in this zone here, we had some points of resistance. Is it? That price had multiple touches in these types of areas. So somebody could say, maybe I'll just be waiting if price again touch this area here, I'll do what? I will sell here because I can see also I have an order block here. Somebody could have said that, okay? But why this is not a good order block? Because when we draw our premium to discount zone, we can see it is in a discount zone, so we cannot sell in a discount zone, okay? Yeah, that was one of my example that I wanted to show you, that somebody could have said this was an order block for selling because maybe it has been an area of rejection. Here we can see there are a lot of resistance areas that price touch, but did not go above this point. You can see a lot of touches here, you see. So we expected maybe if price again touch here, we will continue to do what? We will continue to sell, okay? But this is not a good area because it is in a discount zone, okay? Yeah, I hope you have get a certain point there on how you can try to draw this premium to discount zone, okay? But also here in what we call a Fibonacci retracement tool, we can also draw our what we call our optimal trading entry, okay? Okay, let me remove these drawings and show you. Let me click on my, first let me do this. Let me do this. Okay, let me click on my Fibonacci retracement tool and draw. So these are what we call our premium to discount zone, is it? Now let's try and let me show you on how we can draw what we call optimal. And these types of entry, we usually use certain points in our Fibonacci retracement tool as our points where we expect, if price starts there, we expect either to buy or to sell, okay? There are some points that we use when we draw this Fibonacci tool as our points where if price touch, we expect it to buy or to sell, depending on the trend. If it is a bullish trend, we expect to buy, and if it is a bearish trend, then we expect to sell. So those points are two. There are 2 points that we usually use them as our very important points for us to buy or to sell, okay? The first point is 0.79, and the second point is 0.705, okay? So these are our very, very important points that we expect if price touch these areas, then we expect it to buy or to sell. So it can either touch one of these points, or it can enter inside or in between of these 2 points, okay? So if either it touches one of these points, or if it touches between these points, then we can either buy or sell. Now let me show you how we can add these points in our Fibonacci retracement tool, okay? You click your Fibonacci retracement tool, then you click setting, okay? Then it will bring you to this, it will pop up, this type of thing will pop up. So you go anywhere, you just go anywhere in this, between these points, you just click one area, just mark, okay? Like that, okay? And then you click here, and then you add your point inside 0.79, is it? Now we have added our 0.79. Then we find another area where can we add another point. Let's put a different color here. Let's change the color of this point, 0.79. Let's put which color? Let's put green color, okay? Then we come to we mark another point, like maybe here. Say, let me add 0.705. 705, and then you click OK. Let me change the color here also. Let me put this color also green, so that I may know these are my areas where I expect to sell or to buy, okay? So now you can see they have added themselves here, you see?
Yeah,
that's how you can find your optimal trading entry. And if you want, maybe if here is for us, if we are waiting for price to touch and sell, maybe the movement was like this, let's say the movement was like this. We had a certain movement like this. Price came here, then here. So we expect if price comes to those areas like that, we expect it to sell. Okay. Like there, you see. So it can either touch inside this, in between these areas, or it can touch maybe one of these points, maybe there, or it can touch maybe here. Okay. Then we can sell. So that's how you can use these points as your very important points for you to buy or to sell. If you are expecting to buy, you just reverse this. If you're expecting to buy, you just reverse. Just go to setting here and you just reverse it. Reverse here. You click reverse here. You see? And you can see now our points are down now. You see they're here. Yeah, that's how you can use these points as your very important points. So you can here you can draw your premium point and your discount point at the same time. You can have your optimal trading entries. Okay. That's how you can use the Fibonacci tool to help us to correctly locate our zones of buying and our zones of selling. Okay. Yeah, so that's how you can find areas. That's how we can find our areas of buying and selling. I think there, Mr. Shak, you have found a certain point. You have got something on your mind, is it?
Yeah, actually, yeah.
Yeah, and I want to show you on how we can use what we call change of characters to find our entries. Like here in this chart, we can find some changes of characters that helped us to find our major areas of entries. Okay. Here you can see we are in an uptrend here. You just see this chart was in an uptrend. Is it? See, we were in an uptrend, right?
Yeah. And
now we can see what happened here, that the market decided to show a change of character, because this was our high. This point was our high. This point here, this was our high. Let me draw it well. This point here, this was our high, is it? And this one also was our high, because it has broken market here. We have created a break of market structure here. You can see a break of market structure occurred here. Break of market structure. Also, you can see here, we had this another high here. As you can see, price broke here. This point was broken. So this becomes also what, a break of market structure. Now you can see that we kept on breaking structures, but what happened? This was our higher low. This was our higher low. This point here was a higher low, and this one was a higher low. Is it?
Yeah.
And we expected these higher lows to keep being respected. As I said, in order to know that we are in an uptrend, we have to see that these higher lows are not broken, right? But you can see here, this higher low has been broken. You see? And here also it has been broken. Okay. Now this was our first change of character. Our first change of character was here. And I told you, I think it was yesterday, that in order for us to be sure that this break of markets, this change of character is very strong, is it? You must see about 2 areas where we had our higher lows being broken. Do you remember? Yeah, and you see here, it is true that our 2 points where we had our higher lows have been broken. So you can see a change of character here, and also down, you can see a change of character. You see 2 changes of characters. You see them. Yeah, and here. But this second one cannot continue to become a change of character. The first change of character is what we call a change of character. But the second one, we call it a break of structure, okay? Because this one was our first change of character, but this one, the second one here, was a continuation of breaking these higher lows. So this becomes just a break of structure. Now what we do, we just look at where did this movement that caused the change of character started, is it? We can see here, this area here, we had our order block here. We had our order block there. That was the first. You see, it has already been respected here. Just very, very good. A very, very good movement. You can see price respected this zone. But also somebody could have used this one here. Did I tell you about what you call an indecision candle?
Indecision? Yeah.
Now you can see this is an indecision candle here. You can see this one. We have an indecision candle here. Can you see it? Let me remove this. Can you see that? Yeah. That's an indecision candle that we can also use as our order block. And you can see price did what? Price touched it. Let me try to shorten it. Well, no, I see like price failed to touch it. You see, price failed with a very, very small, few pips right here. So if it failed to touch our indecision candle here, we have to be very careful. This shows that this was what we call a liquidity area. Okay. They are testing sellers. They are testing those L sellers that we have not touched here, but they give them temptation that why did it not touch here? Oh, is it just my own mistake? Is it? Did I just do a mistake? Maybe I didn't draw well my order block. Let me sell here. Somebody says like that. Is it? Let me sell here. And he's maybe expecting to have a TP at this area here. That's why he's expecting to put his TP here. Take profit. Is it? At this blue line. Okay.
Yeah.
What happens? Price drops down, but did not touch this our TP here. You see, it does not touch. Is it? Now somebody does, maybe someone did not see this, was just after pressing an entry here, continues the other works, is it? And said, I just waiting for my TP to be hit. I'll just look after maybe after 2 hours, is it?
Yeah.
But what happened when the market was dropping, when market reached here, that was an area where now the market makers said, now let's go to our true order block. Now let's move to where our true order block is it? And our true order block is where? Our true order block is here. That's our right order block. This is our bearish order block that we expect to continue selling. This one here, okay? And in order to know that the market makers wanted to take out these early sellers from here, from this point, they moved to the upside with a very great momentum, You can see this movement here. Such a very, very strong movement to the upside, is it? This one was a very strong movement to the upside that was intentional in order to grab those early sellers here. Early sellers who wanted to sell here, who entered here. Okay. So this becomes an area of liquidity here. This becomes an area of liquidity. Now the market has pushed the upside and moved from this point, went up against this area. And if somebody, maybe those sellers decided to put their stop loss in certain areas like here. See, maybe somebody said, let me put my stop loss here. Let me put my stop loss here. Now you can see that the stop loss has been hit. Stop loss has been hit and price has respected what? Has respected our bearish order block that was at the upside. Okay. You get my point?
Yeah.
Yeah, that's how the market makers can do. And you can see how the market moved to the downside now, and maybe for us who wanted to sell there, we could have placed our TP here, is it? And now you can see our TP has been hit. If somebody said, I'll sell from that point, from here. I sell from there. Now you can see we are in profit. Our TP has been hit here. You see? Yeah, and we have placed our stop loss here a little bit above our order block there. So that's how we could have found our profits, and now we could have analyzed the market in a very good way. Okay. Yeah, I think I have analyzed it well for you to understand. Is it?
Yeah, I have a question.
Yes, yes.
Second point, second order block is a
Yes.
substructure, and therefore we didn't touch it.
This one here.
Yeah.
Yeah, it is inside. Oh, so that's very good. That's very good. This is inside the substructure, is it? It's not a strong point. You have reminded me. That's very good. That's very good. It is a substructure because we know our general structures like this, or our structures like this, then we had this. So we expected price to respect this zone, is it? Yeah, that's good. That's good. And this was just a substructure. This one here, this one here was just a substructure. This was just a substructure inside our major structure, is it? Yeah, that's good. That's good, Mr. Shark. That's good. It is in a substructure. Another thing you just want to ask?
Yeah. What's the difference between break of structure and break of market structure? BOS and BMC.
Yeah,
It doesn't matter.
they are the same. Just people trying to use several different words. The BMS, the BOS, others use this. Is it?
Yeah.
And other uses this. You see those three words?
It doesn't matter, yeah?
Yeah, it doesn't matter. They're the same thing. This is called the break of market structure. You see, BMS. And this BOS is break of structure. Okay. And this SB is a structure break. The same way. This is just people trying to change the things, trying to modify words, but they are the same thing. Okay. Yeah, that's it. Don't get confused. Just people trying to change some few words, but they are the same things. Yeah. Another question?
Not a question.
Yeah.
Yesterday I've tried to trade sometimes, but I got many stop losses. I don't know why, because I've tried, I've seen all of that, but I cannot. No. First of all, question.
Yes.
How many times we can respect order block? How many times?
You just need to use that order block for the first touch. The first, that what we call first touch or the second touch. Only either two, not more than two. Okay. If there are more than two, they become areas of liquidity. Becomes an area of liquidity because you see price respect at the first time, at the second time. Now at the third time, it becomes like an area of liquidity now. That the market will break that zone.
Because but the first red one is a British order block, and as I know, we confirm it. Yeah, we respect it in substructure.
Yeah, here.
Yeah,
it touched the here, right? You see.
Yeah,
but that one we don't consider that because this was a risk area. See, this was an area of great risk because you see, we have not seen a change of character here. You see, its change of character has not been broken. We don't see here, this higher low was not broken. Now we cannot say this is an area for us to sell. If we try to sell here, sometimes we can get stop hunted because the market can continue to go higher. Is it? So this was not a very great area for us to say we can find entrance here. We can just wait for the market to touch this order block and sell. It's not a very good area because it's not an area where we can see signs of the market changing the trend. Okay. This was just like trying to touch and then continue the movement. And this was not any strong movement that we can say is a good area for us to sell. We don't see here any change of character here. Okay. And that's why you can see this zone was broken here. This zone here, price moved above that point. See, let me try to say, not that point. You said this, you said this one. This one, is it? You say this was an area of entry, is it?
Yeah.
You can see what happened. Price did what? Price moved above this point here, went above this point. That means they were trying to grab liquidity here. Okay. But because this was not a very strong area for us to enter the market, we didn't see any change of character here. So you cannot use this, you cannot say this was a retracement to our order block. Okay. A retracement to our order block must show us a change of character or a break of structure. Okay. So because this one did not show us any change of character, we cannot say this was a mitigation that we can enter the market right away and sell, because it would be very risky. This is just a simple, this was a lucky. Somebody could have entered here and get profit, but this could have been just a lucky entry. Next time you could have been stop hunted because we didn't see any change of character. Okay. So now we have just to make sure that our what we call our rules have been met. All our rules have been respected. As I told you before, that our rules must be that we must see a movement to the downside or to the upside that causes a break of structure or a change of character. Okay, that was our first rule, is it?
Yeah.
Another thing, we must see that what we call a change of character or a break of structure, as I've said. The third point, we must see what we call some areas of imbalances. Okay. But sometimes those areas cannot be found. You can try to look at areas of imbalances, but you cannot get them. It's not easy. Maybe they have been created and then they have been filled. You see an order block being created, then filled, then another block created, then filled. Okay. Like here we had some areas of imbalances here. That one.
Yeah. Means that we can use the risk entry or normal.
You can use that. You can use that depending on your system. If you decide to use the risk entry, make sure all your entries are just risk entries. Make sure you follow your rules. If you say me, I'll just be entering, use the risk entry, make sure all the time you use that risk entry. Okay, because if you use today risk entry, tomorrow just use confirmation entry, you will be confusing yourself. There is a time that you say, which type of entry should I use? Should I use a risk entry? Should I enter here in a risk entry? Or should I wait for a confirmation? Then you try to confuse yourself. At the end of the day, the market moves and you have not entered any position, and you start complaining yourself that, why did I do this? I should have entered in this area. I could have entered here. I could have been in a 500 pips. You see? So make sure you follow what you want. Follow your rules. Follow your rules. If you want to use risk entry, just use that risk entry. But make sure you have what we call what to see in the market for you to enter. What do you wait for the market to show you in order for you to enter, in order for you to take a position, in order for you to buy or to sell? You have to have your rules that after I see this and this, I have to enter. If I don't see this, I'm not going to buy. I'm not going to sell. I'm not going to take any position. Okay. Make sure you have those. You have your set of rules. Make sure you have them. I will use risk entry, but I'll make sure I see either a break of structure, I see either an imbalance creation, I see either a movement to the downside or to the upside with a very great momentum before price touch my risk area. You must make sure you see what we call your rules being filled by the market, showing you that I have respected your rules, all of your rules. Now you can enter. Okay. Just make sure you see everything that you want to see. Make sure you have those rules that you follow. Always, all the time. Don't break them. Yeah, for me, I usually enter when I see if the movement was an uptrend, I see a change of character, I have to make sure I see that the market has broken two areas, two higher lows. Like here, we can see two higher lows being broken. The first and the second higher low. First and the second, they have been broken here. The market broke to the downside. Now I'm waiting for price to retrace back to my order block. Okay. That's my rule. And I also have to see liquidity. I have to see that the market is taking out some early sellers. I have to see any area where I can see that the market here is creating liquidity. And you can see here the market created liquidity here. Okay. It didn't touch my order block, but it moved to the downside. Before touching my area of take profit, it moved to the upside with a very great momentum and took out this and stop hunted, took out this stop process of the early sellers. And now you can see it has touched our order block, and now we can sell, and you see how it has done. We have a profit. Okay. So those are what you have to make sure you see. You have to make sure you have the rules for you to tell you that this is a very strong area for me to buy or to sell. Okay. Yeah, I think that you have grasped, you have got a point, and you maybe have added something in your mind. Is it?
Yeah, I got it.
Yeah, that's good. So I wanted to show you that. I wanted to show you on how you can locate your zones, and on how also you can try to analyze the market, on how you can see the change of characters, and how you can try to be careful and see the liquidity in the market, and how you can trade with a very confirmation entry that you cannot be stop hunted. Okay.
Okay.
Yeah, I think for today we should end there. I think we should get more practices on how you can find these zones, and I think tomorrow I'll have a live analysis with you, seeing how we can analyze the market from a higher time frame to a lower time frame, and so that we may know where to buy, where to sell from the higher time frame to the lower time frame. Okay.
Okay, but tomorrow I cannot.
It's okay. You just tell me if your timetable will not be available tomorrow. You just tell me, and then we can do it another day or another time. I'm always okay. You just tell me.
Okay.
So tomorrow you will be?
Tomorrow.
You'll be busy. You cannot have time
Unfortunately,
for.
I cannot. Yeah.
Okay, that's not a problem. It's not a problem. It's not a problem. Okay.
Okay.
Yeah, if I get some times and have some things to share with you, I can send you through WhatsApp. I can send you some analysis, and you can look at them. The other time when you are free, you can see how I analyze the market from higher time frame to lower time frame. And then the other day when you are free, we can do a live analysis. Okay.
Okay.
Yeah.
I'm waiting for it.
Yeah, no problem. So I'm going to end
because
this.
it's for me problem to higher to a lower time frame.
Yeah, that's a very good type of analysis. You have to analyze the market from the higher time frame to the lower time frame for you to know that I'm in a good position. Okay.
Okay.
Yeah, that's how we analyze the market easily.
Time is over.
Yeah, time is over. Time is over. I've less than 1 minute here.
Yeah.
Yeah. So have a good day.
You too.
Yeah. Thank
Thank
you.
you, bro.
Thank you.